We're going to work on Carrot Top here, and we're going to try to figure out what is the total stockholders' equity at the end of year X9, which was the first year of their business. So the first thing they do is describe two shares classes of stock. We have a $5 par common stock, and we have a $10 par cumulative participating preferred stock. Now, these are just authorized, meaning that there's paperwork that's been submitted to the Secretary of State in which they're incorporated. And they could issue those shares, but they have not issued those shares yet. But they can. They're legally allowed to. But then we see on January 1 of X9, they did issue some shares. They issued 8,000 shares of common and 2,000 shares of preferred. So let's record that. So let's do the common first. So we have to split the 8,000 into par and excess of par. In the par account, we would put the 8,000 shares times par. So par is $5. It was issued for $14, so that's $9 above par. 14 minus 5 is 9. So all 8,000 shares times the excess of par is what you would get. So cash would go up by that 112,000, and then we would split that 112 that went into assets into contributed capital in these two piles that are required by law. All right. For the preferred stock, we had 2,000 shares, and again, we have to put par in the stock account. And so the par is 10. And then anything above par, we have to put for all 2,000 shares into the excess of par. So it was issued at 20, and the par is 10, so 20 minus 10 would be 10. So here we've recorded what we got. We can add that up. So at the end of that first day of the year, they have 152,000 in contributed capital. They haven't earned anything yet. Retained earnings is 0. Then they tell us at the end of the year, they had profit of 375, net income of 375. That increases retained earnings. So we'll put that in here. And then they did declare a dividend, declared and paid. So that comes out of retained earnings. That's going to reduce it. And so they want to know what is the total stockholders' equity at the end of the year, December 31st. So we would just add across all the activity and then add up all the accounts and see what we get. So in this case, you would get 516,000 would be the total stockholders' equity at the end of the first year, which would record the contributed capital for common shares, the contributed capital preferred split into par and excess of par. Also showing the retained earnings, which starts with 0, adds net income, and subtracts dividends. Let me know if you have a question.